What's up, people? Welcome or welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. Well, how about that? Just when you thought that it was going to be smooth sailing into next year, someone comes out of nowhere and screams, Omicron variant! Next thing you know, the whole market went down like these guys here. As much as you want to look away, you just can't, right? So, fun fact, this sell-off has wiped away all of the November gains from the market, and the last time the Dow Jones fell by this much in a single day was on October 28th of last year in 2020. Did you panic and sell? Well, I hope not. I debated which stock or crypto-related topic I should cover in this video, and in the end, it's moments like these that taking a macro view of the market is the most beneficial. So, with that in mind, for today's video, I have two clips that I plan to play for you, touching on how the market sell-off is being viewed by two prominent fund managers. I'll give you my own perspective, and I'll wrap up with my portfolio performance expressed in percentage gain or loss for the week. I'd recommend watching all the way through so you don't miss out on any prominent information. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. But before that, let's announce the winner of the surprise Thanksgiving NFT giveaway, and that would be Frailboy Row. Your new elite Doge Club NFT will be dropped to your wallet before the day is over. Enjoy it. All right, let's get into it. This first clip here is with Tom Lee, managing partner and head of research at Fundstrat Global Advisors. For reference, he has been top ranked by the institutional investor benchmark every year since 1998. I've shared content from him a few times on the channel before, and the main reason being that he has been consistently right about the direction of the market. Take a listen.
Today's market reaction, and what do you think about whether we should be taking this new COVID potential threat seriously as an economic event?
Hi, Michael and Sarah. First of all, happy Thanksgiving or happy post-Thanksgiving. I mean, it's, today's obviously a fierce reaction, and the markets are always going to be a little worried about things that change visibility and things that can cause policymakers to panic and then eventually consumers to panic. And today is a great example of that. The VIX has already risen 45% and the 10-year has come down dramatically. So I would be in the camp that I think today is much closer to marking the actual tradable low. Our technical strategist, Mark Newton, has called for a 3 to 5% correction that was going to start and then end in early December. I would say this is the hallmarks of this is actually today. I mean, I'm not a scientist, but there has not been a variant of COVID that has actually truly changed the direction of the economy. So I know this is very alarming, but look, policymakers are panicking, and generally when policymakers panic, that's when investors want to actually step in.
That last comment couldn't be any more on point. I'm bullish on the market, and the beauty of having a long-term view when investing is that you don't get fazed by these market blips and instead take them in stride. I could show you a few articles and go on a super elaborate explanation as to why I'm personally not concerned about this Omicron variant. And to be clear, I'm strictly speaking from the investment point of view here. As Tom said, there has been a multitude of variants to date since the pandemic started, and here's what I want to actually show you. Year-to-date gains on the S&P 500 stands at 22.33%. 1 year, 26.59%. 5-year gains, 107.59%. And if you look at the individual stocks I cover over the same period of time, the gains are equivalent or greater. My point is simple. Unlike last year, we now have vaccines, booster, and pills to fight off the virus. It's human nature to worry, to try to manage risk, and outright panic when there's some uncertainty, right? So that's pretty normal. That said, if you take a step back, you'll realize that the world is adapting and moving forward. This therefore means that at worst, this is a hold your ground position, and at best, buy the dip depending on your financial situation. Because the last thing that you really want to be doing is selling at the bottom. Okay, well that sounds good. What about crypto? That sold off too. Yes it did. And this brings us to clip number 2 with Anthony Scaramucci from Skybridge. I've also featured him on the channel before, and he has a $100,000 price target on Bitcoin. So let's take a listen.
The market stuff, I would tell you, Andrew, it's Black Friday and things are on sale. And I think you got to just take a step back and think of 3 factors. One, will the Fed tighten and taper as aggressively as they were thinking about? The answer to that is no. Number 2, are stocks on sale? Obviously they are. And if the Fed is not tapering, this is a buying opportunity. And then the third piece would be related to crypto. What Dominic is basically saying, I've always looked at it as an early adopting technology asset related to value, related to cryptocurrency in the sense that it's currency, but it hasn't fully adopted yet. You're only talking about 3% saturation. If you and I were on this conversation a year ago, Bitcoin had 100 million wallets. Glassnode is saying there's about 240 million today. So that's great exponential growth, but it's not fully saturated. So I think there are buying opportunities all around. And you just have to, if you don't have leverage on, this is a good day for you as an investor.
That makes perfect sense to me, and I couldn't have said it any better myself. Notice how both him and Tom are pretty unfazed. Well, the key here, and what I've said consistently, is only invest what you can afford to lose, or at the very least, what you're not looking to tap into near term for liquidity. You can insert any crypto name here, but let's just say Bitcoin and Ethereum. Despite the sell-off, both have only retraced back to the level they were at about a month ago, and they both still sit above their respective support level of 53K for Bitcoin and 4,000 for Ethereum. And because I personally view this as a discount, I took the opportunity to buy. Again, probably a good time to note that I am not a financial advisor, but viewers of the channel already knew that. This last clip gets after the crypto naysayers' favorite argument every time Bitcoin and crypto in general drops with the rest of the market. Take a listen.
The question I'd ask, though, is on a day like today, given what Bitcoin, for example, is supposed to represent as a hedge against inflation, it, by the way, doing not even as well as the airlines.
Well, I don't think it's a hedge against inflation at this moment in time. I think long term, if you got to 1 billion wallets, 2 billion wallets, and Bitcoin was in a what I would call a stable trading zone. Think of Amazon 20 plus years of Amazon. This is sort of Amazon in the year 2000. So this comes with some volatility, and it comes with a lot of fear and uncertainty. And so that's the reason why it's down. However, in the research that we've done, it doesn't necessarily track the NASDAQ either. I just think this is a risk-off situation right now. Bitcoin and other cryptocurrencies being volatile, that's taking people out of the game. It's also washing out some of the leverage, which I think sets up a pretty nice first quarter, Andrew. So, no, I would love to debate the people that think that Bitcoin is an inflation hedge at this stage in Bitcoin's evolution, because I just don't see that as being the case.
All very solid points, and the main takeaway here, again, is the time horizon with a long-term view. This is why I accumulate now with every chance I get, while a large portion of the population worldwide still lacks the resolve or understanding of what blockchain and crypto will bring to the global economy. I previously covered that the US regulatory framework around crypto is set to go into effect in 2022. Meanwhile, Europe has been ahead of the US, generally speaking, when it comes to crypto adoption and integration. Now, Germany is taking it to the next level, and I quote, "We need a new dynamic in relation to the opportunities and risk from new financial innovations, crypto assets, and business models." They go on to say, and I quote, "We advocate a level playing field with equal competitive conditions within the European Union between traditional and innovative business models and towards large digital companies," end of quote. So what exactly do they mean by this? Well, it doesn't get any clearer than this last quote here. Digital financial services should work seamlessly. Therefore, we will create a legal framework and the possibility to expand the issuance of electronic securities to include stocks, end of quote. I've told you before that the world is going digital. Every asset class will be tokenized and moved onto the blockchain. Both centralized and decentralized blockchain crypto networks will be interoperable. Germany is part of the European Union, so whatever policy they adopt will need to be in line with the entire union. You're starting to see a shift take place more openly now. The last point I will make here is this. The Bitcoin network has only been in existence for 12 years. Just recently, it was reported that it processes more volume by dollar value than PayPal. For context, PayPal is one of the largest centralized cryptocurrency networks in the world by market cap, and it has been in existence for 23 years. As of this Thursday, the Bitcoin network processes about 27% of MasterCard's $1.8 trillion volume per quarter. Market intelligence platform Block Data believes that the Bitcoin network could overtake MasterCard in time. In their report, they state, and I quote, "Taking the current growth rate in 2021 as a metric, it could happen as soon as 2026, end of quote. So really, the question that every investor is going to have to answer for themselves at this point is, do you really want to miss out on this exponential growth because of near-term volatility? Or are you going to step back, take the long-term view, and invest accordingly? Well, only one person can answer that. With that said, let's switch over to the portfolio weekly performance expressed in percentage gain or loss. We already know what took down the market this week, but before the new variant became a thing, the portfolio was up at 1.07% in pre-market on Tuesday, then dropped as low as 9.90% in pre-market during the Friday trading session, and finally stabilized, and I closed the week with a 8.65% loss. It's anyone's guess how we close out November, but I'm still pretty bullish on closing the year higher than where we are today. And if for some crazy reason we stagnate, this just means that I have more time to accumulate. Either way, this is a good thing as far as I'm concerned. And on that note, I'll leave it here for today. If you enjoyed today's content, make sure to smash the like button and share with others who you think could benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you don't miss out on any future content just like this. As a reminder, I post every Sunday and also target one additional in-week video for more crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.